I'm going to hand over to our last keynote, who needs no introduction to any of you. It's Ashley Alder, Chief Executive of the SFC here in Hong Kong, and he's been in that role since October 2011. And since May 2016, he's been chair of the IOSCO group. And as you know, we are doing this event on the back of the EU Asia Financial Forum, and Asia is represented by the APRC, which is an IOSCO committee. So over to you, Ashley. Thank you for joining us today.
Great, thanks very much, Mark. I just want to check if you can hear me okay.
Yes.
Yeah, even after 2 years, you still have to ask that question. Okay, so right, I think just really I wanted to end with some reflections rather than a sort of standard sort of keynote. The first of which actually is just to pick up on Massa's first point about fragmentation and decoupling, etc. I think he was referring to, in part, to a comment by Larry Fink last week in his shareholders letter. And I think there is a serious point here, because you can see a trend to what he called the end of globalization, which stems back actually for some time. So, you know, I guess the beginnings were rooted in the financial crisis, you know, back in 2008, 2009, and then populism, the sort of voices of the, you know, so-called left behind in Western countries, which was basically anti-globalization and the politics that went around that. And then we had, obviously, moving forward, we have COVID. And what part of what happened there was a concern around supply chain resilience. And there were lots of conversations and actually a lot of activity around onshoring at that point. And of course, we now have the situation in Ukraine, which of course is tragic. But again, particularly when it comes to energy, there is obviously an extremely big discussion associated with sanctions, amongst other things, mainly sanctions, about again, dependencies and fragilities arising from dependencies and how you deal with that in future. And as many have said, one of the interesting potential outcomes of that is a greater acceleration to sustainable energy sources after what is assumed to be a spike in traditional fossil fuel sources in order to respond to sanctions. So I think actually there is an overall economic and commercial trend to deal with the risks of dependencies, deal with the risks of dependencies in supply chains, and to a degree to localize so far as possible to, you know, to diminish the risk arising from those dependencies. So I think that is definitely a trend, which, you know, regulators and others can't do a great deal about, because I think it has a, you know, they have the sort of powerful economic and political drivers to all of this. However, I think, just to pick up on, again, on Massa's point, I think international cooperation now, given the subject matter that we have to deal with in finance, is far more vital than ever before. And we can see, for example, that in the response to COVID, in particular, the Dash for Cash episode back in March 2020, the need to cooperate real time across regulators across the globe in order to address what could have been a sudden stop in financial market activity was really important. And of course, you know, today we've been discussing climate and crypto. Climate is by definition and sustainable finance, but climate in particular, is by definition a global issue. Climate change does not respect borders, and equally, crypto, as many have pointed out, has a very significant risk associated with it, which is regulatory arbitrage across borders. So I do think that international cooperation is more vital than ever, despite the underlying economic, political, and commercial trend to roll back globalization. Now, so I just want to get on to just on those two topics of crypto and sustainable finance. I know that you've had panels today talking about this, and apologies if I repeat some or even all of what has been said already, but just a few thoughts on sustainable finance. The key issue here, I think, for us as regulators is that we fully understand that much of the activity around stable finance is entirely founded on real economy, corporate level data and disclosures. And if that's missing, then asset managers, those who conduct stress tests on banks, insurers and others, all the financial market participants don't have much to go on because they don't have the data and they don't have the consistency. And that's why we think in IOSCO that the International Sustainability Standards Board effort is so important, because its ambition is to supply a global baseline, not a competing standard with the standards that are being produced in the EU or standards that are now being proposed in the US and others. Now, the main attributes we think of the ISSB is firstly, it's got real momentum. It was announced in COP26 in November last year. Emmanuel Faber, who's the ex-Danone CEO and chair, was appointed in December, and in a few days, the ISSB will publish its climate standard exposure drafts. So that's massive momentum. Secondly, it's important, we think, from a markets perspective and an investor information perspective, that the traditional accounting standards, IFRS, sit under the same roof as the board that will develop the sustainable standards under one IFRS roof, because there is definitely a connection, or there should be a connection between disclosures around, say, climate and other sustainable finance issues or sustainability issues and traditional financial statements. So the under same roof point is important. I think thirdly, the ISSB has achieved something quite remarkable, which is it has merged with what had been international standard setters in this space. So what you end up with is a convergence of not only standards, but also standard setters themselves, that then reduces, the noise in the system. And also, I think, we should remember, it goes back to this point about the basic information that's needed to enable sustainable finance as an activity to be credible and to be informative and to be, from an investor perspective, useful, is that this information is absolutely essential to support other objectives like net zero targets, like carbon pricing, because you can't manage what you can't measure. And this is the basic measurement. And then finally, from a securities markets regulator perspective, greenwashing is so important, such an important topic to tackle. It's not trivial. We see it, if anything, more and more. And again, credible data, which is investor focused, should be an answer to greenwashing, but we'll see. But it's really, really important. Now, the challenges, that's all of the attributes around the ISSB effort. The challenges are a few. The first of which is there is a continuing debate around is it good enough because it doesn't explicitly incorporate the European idea of double materiality? Now, it has a focus on enterprise value. In other words, information that is relevant to a judgment of enterprise value by the providers of capital. That's what it's doing. But the reality is that corporate impact on the environment, and in particular in relation to climate, the emissions footprint, is relevant to enterprise value. And enterprise value disclosures will be relevant to stakeholders other than shareholders of companies. So for that and some other reasons, I think there's less to this argument that meets the eye. And it shouldn't, I just don't think it should be seen to be a very significant difference between what ISSB and others are aiming at. It certainly shouldn't get in the way of consistency. Secondly, and it's linked to this, the ISSB standards do need to be interoperable with standards being developed at a jurisdiction level. The EU certainly, the US, I mean, the US has proposed its disclosure standards only a few days ago, and it's interesting. The US, in doing so, has referred explicitly to ISSB in an expectation that there would be sufficient consistency and certainly no conflict. The third sort of challenge is all around this concept of assurance. Just as conventional financial statements depend on audit to enable investors and others to have comfort that there has been independent oversight of the information produced by the company, by the preparer. Similarly, there does need to be an assurance framework, an independent assurance framework in relation to these disclosures at some point. It's difficult because the type of measurements involved can be quite uncertain. And when it comes to scenario analysis, of course, it's forward-looking. And also much of the data is not internal to a company, much of it is external. So lots of challenges there, but they need to be tackled. And then finally, I would just say that we often talk about this in the context of publicly listed companies. But of course, when it comes to climate, again, global emissions do not distinguish themselves as between public and private. So we need to think about how this might apply to non-public companies, non-public enterprises. And I just on this topic, I'll just finally just say that IOSCO is sort of turbocharging its efforts this year. We have rejigged the way in which we've organized our sustainable finance task force. So we have one group that's explicit job is around endorsement or potential endorsement of the ISSB standards to our membership, which is large. It's roughly 130 countries as members of IOSCO. So that signaling effect would be quite powerful. Secondly, we're following up on reports we published around expectations of asset managers, and also this very difficult topic of ESG ratings or scores. We're following that up this year. And thirdly, and very importantly, we're going to get on to carbon markets. We know the difficulties around offset markets and such like, and again, credibility issues. So we want to get onto that from the perspective of market regulators or securities regulators this year. So that's all I'm going to say about sustainable finance for the moment. Turning on to crypto, it's interesting. The reality is the degree of international cooperation in this question or questions around crypto is not as advanced as sustainable finance. And in sustainable finance, we have the international platform, which is European inspired. We've got the NGFS, we've got G20, we've got IOSCO, etc. I mean, it's quite a full docket of international cooperative efforts around this. Not so much around crypto. Some recent highlights, basically, of cooperation, however, have been, as I know it's mentioned in the previous panel, the CPMI IOSCO report on the payment function of systemically important global stablecoins, and that was judged against the PFMI. We are following up that work together with the Basel Committee, and I agree with those who said, I think on the panel, that this isn't just about payments. There is an investment component. There could be a deposit component. The thing about crypto is that many of the entities and the organizations involved amalgamate what in traditional finance is often segregated in terms of activities or segregated in terms of entities, which are then the target of or the focus of regulation. Here it's rather different. So we have to be very agile to think about these combinations when approaching regulation and crypto. Anyway, so we're following up on that. And IOSCO recently published, just on the 24th of March, what I think was a great report actually on decentralized finance. The FT heading in relation to that was DeFi projects rife with hidden risks, which I suppose was a fair summary of that report. So, you know, we're all getting going now, but again, it's a bit later, and partly because crypto was seen to be not seen to be an imminent financial stability risk, among other things, until quite recently, and also a relatively small proportion of global financial assets. So right now, we're working on three areas, really, which are all interconnected. There's the sort of financial stability area, which is mainly Financial Stability Board, and which is now just in the process of setting up a group to look specifically at non-stable coins crypto assets, what some people call unbacked, although I don't particularly like the term unbacked because it implies that all stable coins are sufficiently backed, which may not be true. So the financial stability side, there's the investor protection side and market integrity side of life, which is more securities regulators, but again, they interact. And then, of course, there's the AML side, which is really important. That really is more about the FATF standards. There's more, of course, because, you know, this is intensely cross-sectoral and intensely cross-border. And in particular, you know, this question of regulatory arbitrage cross-border is a specific concern. Now, I'm going to finish off with just saying what are the key considerations that we all are bearing in mind when approaching our international discussions, whether in IOSCO or with the FSB or with the Basel Committee around this. And some of them are fairly obvious, but it's worth restating what our approach. First, of course, you know, same business, same risk, same rules. No argument about that. Secondly, and this is really important, what are the regulatory touch points we can look to relatively early in the day? So I'll just identify three. One is in relation to so-called decentralized finance, and that's to do with effectively identifying the hidden controllers as a regulatory touch point, because they do exist, and much of DeFi, as our report makes clear, is decentralized in name only. Secondly, crypto service providers. There are lots of different names, but let's call them crypto exchanges. You know, in the main, these platforms is the place where most people interact with crypto. They're readily identified. They carry out multiple activities. They are amalgams. Like, you know, each one is a little bit different, but they're amalgams of types of exchange, types of custodian, types of broker-dealer, wallets, etc. The list is quite large, but they are a regulatory touch point, which I think is identifiable and feasible. And in fact, in that argument about the debate about is it a security or is it not a security, is it deposit, is it central bank, etc. In Hong Kong, the legislation we are piloting at the moment or putting through at the moment is basically identifying platforms and to regulate, irrespective of whether or not the underlying assets that can be traded on the platform are securities or not. we think that's the most sensible and rather intuitive way to do it, but that's what we are pushing. And then the third point around what are the touch points, of course, are the regulatory anchor points in traditional financial services. So, the point at which a member of the public or an institution then interacts with a bank, an asset manager, a broker dealer, etc., in order to be provided with crypto services. And that touch point, I think, is relatively straightforward. I think the next point I'd just like to make in terms of, what are the key considerations. I think there is a broad consensus that no, this is not an area where we would employ an alternative rule book just for crypto, specially designed for this world. I think many think that would be extremely dangerous. It doesn't comply with the same business, same risk, same rules principle. And instead, we think it's eminently feasible to bring together existing standards in relation to investor protection, in relation to payments, in relation to collective investment schemes, custody, AML, data privacy, etc., and adapt them accordingly. So I think that's important to bear in mind. And then the final point I'd make is that there is often a debate about, well, should this be an activities-based approach or an entity-based approach? I think given the way in which crypto operates in a rather sort of shape-shifting mode to bundle up a whole set of functions and services, the bias should be activities-based. If you try to deal with this on an entity-based approach, then I think you'd miss quite a lot. And I just one point around the interaction between crypto assets. Of course, one of the major functions of stable coins is to so-called on-ramp onto other crypto assets in DeFi or whatever it might be, and off-ramp back into fiat. So the connections between all of these are becoming fairly clear, which would then militate towards an activities-based approach. So that's really, I think, in as short a manner as I can, sort of covers the principles that we're applying. I think this year, not surprisingly, just to pull back a bit, I think the sustainable finance scene is going to be very interesting, because not only is the US going to progress on its proposal around climate disclosure, obviously the European effort in the same direction is going to gather pace, and at the same time the ISSB standards will be produced hopefully by the end of the year. Let's say exposure drafts in a couple of days' time. So a lot of activity here, but it does need to be sufficiently consistent, and the ISSB standards do need to be the global baseline. So for example, in Asia, which accounts for around 50% of global emissions, it's really important that that baseline is sufficiently practical, comprehensible, and implementable to be picked up pretty quickly. So that's on the climate side. On the crypto side, yeah, I think the momentum is picking up incredibly fast from a regulatory perspective. The single largest challenge will be regulatory arbitrage and the cross-border aspects, which we will have to get onto as a matter of urgency. So with that, I'll leave it there, and back to you, Mark.
Great, thank you very much, Ashley. As always, very clear, very comprehensive, and a very easily digestible format of what the concerns and views are, and what is coming next. So again, I want to thank you for your spending the time here today. I think the remarks that you made, Kono-san's made, and others have made throughout the day around deglobalization and the threat around that, in particular to fragmentation, and why it's so important that we actually have regulatory cooperation for things like sustainable finance, which, as you've made the point, and others have, I mean, this is really here to save the planet, and we need to work together in a cooperative fashion to do that. And I think as the panel addressed on taxonomies in particular around interoperability and why that's so important, but also just the overwhelming, the overarching concerns around data and standards and why that is so important. And again, all of these things need cooperation at the global level. And then in crypto, you're making the point that things are ramping up very quickly. I know Benedict made that point on the panel. It's a very important one, but maybe, as you said, a bit behind sustainable finance. But regulatory arbitrage, is being probably the biggest issue. But there's a lot of things in that. You talked about the distinction between deposits, investments, and whether that's central banks or securities market regulators taking the lead. But there's issues in there around financial stability. There's issues in there around data flows. So it's quite complex. So and I think that pretty much covered everything we talked about today. So it's really good to end on this note. I wanted to take the opportunity to thank all the speakers, not just Ashley, everybody who spoke today, all the panelists, highly appreciated. I wanted to thank Afore for doing the logistics, and Nick Reinhardt in particular, who we've worked together on this for 8 years. I wanted to thank Sheena and my team as well. Hopefully next year we'll do it in person. I mean, it's been 2019 since we did this in person, so this is the 3rd year where we've had to do this by this method, and it's always better when we're able to kind of meet and interoperate together in person. So hopefully next year in 2023 we'll be able to do that. So with that, I'll conclude this. I think we're only about 5 minutes over, so pretty much kept on time. And thank you all for taking the time today and connecting in through Zoom. Hopefully see you next year in person. Thank you very much.